welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on investing in South African equities. And my guest is Julian Koski, the Chief Investment Officer of New Age Alpha. Investors in South African shares have had a rollercoaster ride this year. After a severe economic contraction in 2020, a boom in commodities prices lifted the market in the earlier part of the year. But economic problems and widespread inequality boiled to the surface earlier this month when the jailing of former President Jacob Zuma for contempt of court sparked widespread rioting, resulting in 300 deaths and extensive damage to businesses and infrastructure. The MSCI South Africa Index covers about 85% of the free float adjusted market capitalisation in South Africa. It's lost 10% since a peak on June the 2nd, but it's still up about 8% so far this year. This market includes basic materials companies such as Impala, mobile phone group MTN and lender Standard Bank. But importantly, it is dominated by one company, Naspers, which makes up about 30% of the market capitalisation of the index. The technology and internet investor is worth about $81 billion and through its Dutch subsidiary owns about 30% of Chinese internet giant Tencent. So how can one navigate the South African market? Let's ask Julian Koski of New Age Alpha. Hello Julian, thanks for joining us. To start with, I'd like to get your assessment of how damaging the recent rioting was to the South African economy. Do you think the market correction was justified?
Yes, thank you for having me on the show. Yes, in some respects, you can say yes, but you can also say no. Look, what's happening right now is investors are impounding a lot of vague and ambiguous information into stock prices. And this is happening globally, but South African market is very sensitive to that. So a little bit of news, good or bad, you see these big reactions to that type of news. And clearly this was big news that happened a few weeks ago. So you would expect that kind of behavior. But it seems to be a consistent behavior in the South African market. So compared to, say, for instance, the Canadian market, which has got very little vague and ambiguous information priced into it, the South Africans tend to want to keep pricing information that's not known. When I say vague and ambiguous, it's not known. We don't know what these outcomes are going to be.
Some sectors, though, are more favourable than others, in your opinion. So which ones represent good value?
So your energy sector, your healthcare sector, materials, these sectors have a very low probability of failure. What I mean by that is at New Age Alpha, we don't look at traditional risk measures. We look at the probability that the companies in these sectors will fail to deliver the growth implied in their stock prices. And if you look at those sectors, they've got very low probabilities of failure. So they in our view, are underpriced sectors, those three, right? At the other end of the spectrum, you've got, industrials, information technology, consumer services. Industrials has got an 83% chance that the companies within there will fail to deliver the growth implied in their stock prices. So that's a lot of speculation. There's something going on there where investors continue to price this information into those stocks, and you could have a nasty surprise at the end of this. So the way we think of investing, you want to take the lowest risk, right? I don't know who's going to be the winner. I don't know which sector is going to win here, but I know that energy and, as I said, healthcare, these sectors have proven that they can deliver the growth implied in those stock prices. And that's all linked to the basic fundamentals of those sectors, not linked to this vague and ambiguous information.
Talking of risk then, let's talk about Naspers. How much risk does its exposure to China pose to investors in South African ETFs?
Well, based on Naspers stock price where it is now, Naspers has got basically a 7% chance that it's going to fail to deliver its growth. So that is a underpriced stock in our view, right? So even though it's got that exposure, again, the fact that it's exposed to China, well, who knows? It's vague. Who knows what it's really going to mean? So to the extent that investors aren't overreacting, they might be overreacting to the extent that they might be selling the stock, and that's causing the probability of failure to actually go lower, right? Because the lower the stock price, the company doesn't have to deliver as much growth to support that stock price. So right now, with a 7% chance of failure, I would consider it underpriced, and we would certainly own it.
Thanks so much for that. That was Julian Koski, the Chief Investment Officer at New Age Alpha. Well, before I go, here are some of the top stories from this sector. South Africa has announced $2.4 billion in relief measures to support businesses and individuals affected by the unrest and COVID-19 restrictions. Most of the funds will be used to reinstate a monthly social relief grant, with the rest to cover insurance claims and help businesses retain staff. Total damage from the riots has been estimated at over $3 billion. Standard & Poor's said earlier this week that the unrest likely took 0.7% off of headline GDP growth this year, but said high commodity prices will continue to support the economy. Meanwhile, business owners and entrepreneurs continue to pick up the pieces following the widespread looting. One of them is retired footballer Lucky Lekwathi, who opened this restaurant in Johannesburg in April. He had hoped he would be spared the looting due to his popularity within the township and his charity work.
They took like everything, including the toilet, the zincs, the water pipes, and the electric wires. They took everything.
Damages came to an estimated $27,000, but he has recouped about $2,000 of that through private donations. He is still appealing for more help from the government and general public.
People are so generous. They are willing to, to help, and we're still waiting, for them to help because of, like now, I don't have money, to start. As you know that I took my money that I saved the time when I was, a soccer player. So like now I'm depending on them, and obvious, I still want to hear from the government. Let's hope that, they are going to help because of this is something that was helping me to put, bread on the table.
And that's your look at investing in South Africa. I'm Elena Casas, and this is Reuters.